Welcome to Think Smart with TMFG. Today I have my guest star, John Iaconetti. How are you doing, John?
Thanks, Mike. Thanks for having me. Glad to be one of your co-hosts, I guess, for the podcast.
John is a senior financial advisor and also insurance specialist in the office. So my title of today's podcast is Why Insurance is Evil. So this should be a good one for you, John.
Yeah, you really put me on the hot seat. I got to have to defend myself on this one, but I'm sure we could get through it.
I think we'll make it through.
Yeah, we'll make it through.
So it was funny. I just got back. I was away in the Philippines. And what I noticed over there was, have you ever been to any countries like the Philippines or China or
No,
India? No,
haven't been to Asia yet. No.
Yeah, it's interesting because traffic is an interesting thing to watch in these areas. And it's organized chaos that goes on. There doesn't seem any rules. No one follows traffic lights. No one follows any stop signs. All that is out the window.
Yeah.
But the traffic seems to flow in this incredibly smooth style
Yeah.
where you think you never get anywhere, but you move along actually quite well between the, where I was in the Philippines, so it was tuk-tuks, motorcycles,
I was gonna say,
cars,
quite a bit of things on the road. Yeah.
all these things go together. They seem to flow in this beautiful fashion. And it was interesting. I was thinking of reasons why that happens.
Yeah.
And one of the reasons is simple, because if you run into someone, there's no insurance over there.
Yeah.
It's
Instant financial obligation.
It's instant financial obligation, and everyone knows that. So everyone's very careful to make sure they don't run into someone, because if you hit someone or someone hits you, you're fixing your own car.
Yeah,
so
exactly.
they all go very smoothly. So it's funny when you see insurance and what it does.
Yeah.
Other examples insurance is when I was over, I had my stepson. He broke his hand, and when he did that, he went to the hospital to go get this fixed. And the cost for all the hospital bills to everything and 2 pins put in was a total of $1,000.
Oh,
now,
jeez.
It's funny because we're in such need of medical insurance because medical is so expensive, right? And that's the thing we run into. We know we need insurance because if you're in the U.S. and you get into an accident, if you broke your hand in the U.S., it'd probably be about $50,000 to $100,000.
Oh, yeah, absolutely.
And this was surgeries and everything with $1,000. So insurance seems great, but we forget that insurance makes things sometimes unaffordable.
Yeah.
Right? So that's one of the disadvantages we find in it. The other thing is people are a little bit confused over how insurance companies work. Whenever I see one of these disasters that happen in the world, you always think, oh, these poor insurance companies. You think it's death for them, right? You see this tragedy happen, and the insurance company's going to have to pay a ton of money. We know a few things. Number one, there's reinsurance.
Oh, yeah.
So, Lloyd's of London and companies like that cover a lot of the reinsurance needs. So the insurance company you have may not be the insurance company that's paying for the damage that's done.
Yeah, they'll I mean, they'll be the ones that get through it. Realistically, I mean, they're in great positions, but it does cause high premiums and high costs, I guess, for people within the area, which at the end of the day for an insurance company, I guess, isn't a bad thing because they're future higher revenues.
Well, this would confuse everyone. Everyone thinks, oh my God, this disaster costs money. This is horrible for the insurance companies. But then come higher premiums, right? And you got to remember, insurance companies are very smart. They work off a profit model.
Yeah.
And every company makes a profit of what they charge. And what the insurance companies charge is the premiums. So if they charge higher premiums over time and have a justification for charging higher premiums over time, their profits are going to increase. And that's why we've seen insurance companies have been a pretty good investment over time.
Oh yeah, absolutely. And I mean, a good way to identify that is even like the dividend rate that a lot of these insurance policies pay out. It's a pretty steady high dividend rate. So I mean, these companies are doing fairly well. And to your point, right, the premiums don't ever feel like they're going down, right? So
the disasters are hit, but the next it's like when you get in a car accident, you think, oh, that was bad for the insurance company. Then you get your bill for how much your insurance premiums went up, and think now they're making a lot more money off us for a lot longer time.
Exactly.
A lot of people talk about the U.S. I know this is big in the whole Trump thing when they're talking about drug price and how much the U.S. pays for drug prices. But again, there's something that's created by the insurance companies.
Yep.
Insurance companies don't mind these exorbitant amount of costs for the drugs because that justifies on how much they can charge for insurance for people. When you talk to people in the States, we take it for granted that we live in Canada and insurance is not as needed, right?
No, I'm not as drastic as the U.S., that's for sure.
Not as drastic, particularly if you're over 65 in Canada. There's some great deals where
drug benefits
and things like that. The States, a lot of people are paying, between a lot of times from when I talk to people, somewhere between $7,000 to $16,000 to $20,000 for health premiums sometimes a year, depending on their situation. particularly if they have to fund it themselves and don't have a company that's doing the funding.
Yeah, yeah.
And again, those high costs in the U.S. are generally caused by the insurance company, because the insurance company wants to justify higher premiums to charge the people and to charge the companies. And the more they have to pay out in drug costs and surgeries and all this stuff, the more they can justify having higher premiums, which leads to higher profits.
Yeah.
So that's all the evil of insurance. That's my rant on insurance.
You're really putting me off on a bad foot here. Yeah.
So John, why did you decide to take on the insurance side of our business? Why do you find insurance is important?
Well, to your point, there is going to be the ugly side of it, right? There is always going to be the cost associated. Insurance is going to be important, and realistically, I would call it the necessary evil. You know, if you're saying it is evil, it is the necessary evil that we should deal with. I mean, we're planners at the end of the day, right? So we're always focused on, if everything's going well, this is what your financial plan could look like down the road. We know life doesn't work that way, right? Yeah. Life doesn't work on that sense where, okay, everything continues to go well. So what are some of the things that really, if things do go poorly, that you really need to protect? And for a lot of people, it's protection of income, right? Yeah. Income is going to be the biggest asset you have. You know, a lot of people think it's your house or, you know, a fancy car you might have or whatever it is. Your best asset is going to be your potential to earn money and earn income.
And it's funny because the younger you are, the more important that is.
Yeah,
and
absolutely.
You know, if you're 25 years old and you're going to make $100,000 until you're 65, there's a lot of protection that's needed in there.
Yeah, and it's absolutely huge, and it's one of those things now, especially even with like mental health and things along those lines, where a lot of people think, you know, I need to lose an arm and I can't work. Well, there's a lot of other mental things that take a toll and actually can work for you from a disability standpoint as well. And if it's not your income, then there's other assets you might have that you might need to consider, and it might be, you know, you might be young and just bought a house and you have this huge mortgage, and, you know, maybe you have a spouse and some kids. You essentially want to protect yourself to the point where if you can't continue working, or if you're not around anymore and not able to provide the same standard of living for your surviving spouse, or maybe it's your kids' education, these are things as well that you should be protecting your family for. And realistically, try to go with more affordable options. There's a lot of affordable insurance out there that you can still pay your mortgage and be covered.
Yeah, don't ever fall for the sign this mortgage insurance deal.
Oh,
That's one of the worst deals. When you go to the bank and take out a mortgage, they will generally try to sell you insurance at the same time. And 90% of the time, when we look at quotes, it's very expensive. So if you do have anything like that, see John for alternatives, and it's much better.
Yeah, exactly. There's so many different alternatives out there. And I always do want to, preface at different life stages, there's going to be different insurance that's going to be necessary for you. So you might be watching this video today and say, what do I care about disability insurance, or what do I care about, covering a mortgage if it's already paid for? But there is other insurance out there that could potentially help. And one of the big ones right now is estate insurance.
Yeah.
Yeah.
Even protection against future obligations.
Oh,
when you have a child. You know, that's an expense. I'd like to think it's assets, but they appear to be expenses for the first 20-something years that I've seen so far. But yeah, that's an expense. You have to make sure that you're covered.
Yeah. Yeah, exactly. I mean, expenses come in all shapes and sizes, I guess, for us and down the road. And obviously it's the expenses while you're living, but, going back to it, the expenses that are incorporated within the estate. I mean, estate taxes can be huge within Canada, depending on, the tax that you're leaving behind, or probate fees that you might leave behind. Maybe that's a future expense that you want to be able to cover to, help your kids or future generation.
That always seems to be, like, maximize estate value is a big one. And also, people use it to have more control over their estate, too.
Yeah,
People don't realize this, but wills are public knowledge. When they go and probate a will, it becomes a public document. A lot of people use insurance to create gifts to people. It's also used to be a very efficient way to get money to people without having to go through. It's tax-free. It's an easy way to get money onto other people.
Yeah, I mean, we've seen it firsthand. Like a lot of our clients in their situations where if you have an open account and that has to go through probate and go through the estate, that could be months before that gets distributed, versus an insurance policy, you could take a couple business days, just, move things along a lot quicker. So
even sometimes charitable donations.
Oh, yeah.
It's an easy way to do a charitable donation. People are always concerned. The problem with doing charitable donations is people are worried about leaving a lump sum in your will, because you do it at a certain point, you don't know what you're going to have left. So if all of a sudden you left $100,000 to a charity, and all of a sudden your estate only had $200,000 left, and you have 3 kids, you've really messed up what those kids are going to receive, right? And if you go and leave a percentage to charity, we know that's a bad idea, because the charities are required to audit estates to find out to make sure everything is legit in there. So sometimes doing a insurance to a charity can make some sense.
Yeah, yeah, absolutely. I mean, essentially, when we think back to it, I mean, insurance as a whole is you're just trying to protect either a major event that you financially would not be able to handle, or maybe something smaller that you'd be able to, help fund, I guess, throughout the course of it. So it doesn't have to be necessarily just health or life. Obviously, there's other forms of insurance that, we deal with on a regular basis.
We all have home insurance. We all have, a car insurance. A home is a huge investment. Could you imagine coming home, your home is burnt down?
Oh, absolutely.
You have to start your life from scratch, right?
Yeah, yeah. Even car insurance. I mean, just the other day, I was driving down Highway 7 and got a stone chip that just, took out my windshield. You don't think twice of it, but, would it cost me a lot out of pocket? Insurance is there to kind of help out.
You also do travel insurance for a lot of our clients too.
Yeah, yeah. And travel's one of those too that a lot of people, again, don't necessarily think about it. You think you're just enjoying yourself on your vacation, but God forbid anything were to happen, specifically down in the U.S. where medical bills are incredibly expensive. It's always great to have that travel insurance because if you're going to be spending, $10,000 to enjoy a trip, it could end up being $25,000, $50,000 depending on if something happens, right? So,
other ones, critical illness, we've seen that pay off many times within our client base where, people are protecting their any type of issue, again, a disease or anything like that, and it helps you through those times and deal with getting better rather than have to deal with the financial situation at that time.
Yeah, critical illness is an interesting one because essentially a lot of people, again, think with coverage through Canada of if I were to get heart attack, cancer, or stroke, the medical system will be enough to cover me and everything will be okay. Realistically, there's a lot of costs associated when you go in that realm, right? And you need that extra amount of money just to focus on recovery and not really have to worry about.
Particularly with a lot of people who are self-employed who don't have that disability insurance, and sometimes it's more difficult, let's say, different types of income to get a disability policy that matches what you have. Critical illness can be a nice topper for that because when we always think of death, you always think you're going to be run over by a truck, but that's not generally the case. So critical illness is a very good thing to make sure that you can get through those times.
Yeah, I mean, disability insurance too, just to go back to that point, oftentimes has like a 90-day exclusion. So you're not getting paid really for the first 3-4 months. It could be until that first payment comes. Critical illness might be, if you need a cancer treatment that's going to cost you money, you can get that money pretty much close to day one and start your treatment without having to wait or, go into debt for that. So
other things we talk is a lot about wealth protection and accumulation. So life insurance, disability, critical illness aren't wealth builders. They're more wealth protectors.
Yeah.
So that's what they're for. What happens to your financial plan if income stops tomorrow? You got to know what's going to happen there.
Yeah.
Sometimes say you're very pessimistic for taking insurance, right? It's a pessimistic view that everything's going to go wrong, but you just have to be responsible. You have kids, you have obligations there. You have to make sure you're planning for the worst case scenario.
Yeah. Yeah. I mean, not every product is going to work for every person, right? There's going to be different things that are going to work for a lot of people in their own individual situation. I mean, however, we talk about it as a planner, you need to plan for all aspects of the coin, not just if things are going well, but you said it, we're not trying to be pessimistic here. We're just trying to be realistic. It's unfortunate, but the stats do say people are likely to get ill and premature death is very possible as well. So you need to be able to cover all ends of the spectrum of your financial plan. And like I said, it's really that necessary evil. It gets a bad rep. Hopefully I've done my best to try to explain it. It's not all insurance companies are evil, but it's a necessary evil, I think.
Yeah, it's one of those things where everyone thinks life is going to be perfect. And I was watching some movie the other day, and they said something happened to some kids, and they were, the kid was feeling sorry for themselves. And in that, the person said, well, you just got the bumps early. Everyone's going to have bumps along the way. Said there's no life without bumps along the way. It just depends on when you're going to hit yours. So that's what you have to plan. So I guess, as we said, it's we'll call it a necessary evil, and I can complain about it, say everything about it, but at the end of the day, it's needed. And I guess we got to acknowledge there's an emotional and financial discomfort around insurance because it's talking about things going wrong, but you need to go ahead and acknowledge that in a proper financial plan. Yeah,
exactly. It's spending money on something you hope you never use, which is a very tough thing for people to understand, and rightfully so. No one ever wants to spend their hard-earned money on the hopes of never using it, but it's necessary just in case.
Well, if you spend it, you don't have to use it. It was a great...
Yeah, it's great. You had a great life. You had a great life.
Well, that brings us to the end of this episode of Think Smart with TMFG. Thank you very much.